Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. A short video on the Euro USD and its cross rate pairs and Swiss franc. Interesting week. We had a lot of varied movement in some of the major pairs, and coming into the end of the week we had major red news at 8:30 Friday morning US time, New York time. And if we just go back through the process, opening range, initial balance, again just building the steps as the week builds, and as a new week begins, we have our opening range, which is typically our Monday, our day one for the day one of the new week. We have a breakout on Friday of Thursday's low that goes vertical and in consolidation. And when we see a large range day like this, obviously the next day on a Monday typically will be an inside range day. Reason being, we had a large range day the previous day. Our Monday begins the week as an inside day. And Tuesday, which then forms our initial balance, becomes our day one longs in the market. Remember, day one longs is the first day that the market breaks out. Not a false break, not a little bump, but we have volume outside of the range. Day one longs are in the market, and this market continues to go higher and takes out Friday's high. So remember, we have Thursday's low of the day shorts in the market. That market then reverses, and the first high of day that it breaks back above is Friday. So obviously Monday's an inside bar, but we have day one longs in the market, and the market closes out of balance. Remember, if it's inside the previous days, it's in balance. If it's outside, it's out of balance. And as Dalton talked about, a market that is out of balance typically carries more risk, but also more opportunity. Day one longs in the market on our Tuesday, the pink line delineating our Friday, Monday. So our trap volume outside of the low of the week, that breakout has now failed. We have day one longs in the market. Wednesday becomes our day two longs in the market, and we had a high of the day, high of the session in the U.S. market, shorting opportunity that became a session trade with no follow through, no first red day. And again, if we bring our Friday's high across, you'll notice again that market closes outside of Friday's range again. And so we have day two longs in the market. And that market goes sideways through the US session low before going vertical on Thursday in the Europe-London window. And we now have day three longs in the market, and we have that market closing up high and out of balance. Remember, when we get day three longs in the market up high, and we're outside of the previous day's range, that's when we potentially may now be putting in a peak formation that can become a failed breakout. We'll have volume trapped outside of a range heading into the end of a week that can now begin our day count possibly on the way back down. And when we have this type of situation, we have higher lows in the US session, and the pump up, you'll notice the pump up in the Asian window does not take out the high of the day. I know several traders, we talked about this on gold before, they're waiting for that false break on the day three and the new day, the false break. But often what that is that traps longs in the market, and they do not let them out. So a lot of traders are looking for take profit, or they're waiting to get in to short this, and the market does not let those longs out of it by breaking the high of the day before breaking down. And you'll notice again the lower low heading into the Europe-London window for the pump up, and then the breakdown in the Europe session. That continued to auction lower into Wednesday's breakout level high from Thursday. So we had breakout traders in the market. Remember, we talked about that gap. When you get a space like this, in most cases, that market is going to come back. Most breakouts will fail, but you'll notice on the other breakouts, when they happen, they usually pull back. Breakout, pull back, continuation. We have a market now that has made a lower high and lower low heading into our U.S. window. Lower high in the London session, We're just talking about process, because what we're going to do is take a look at when you get a market now that potentially is forming a first red day, so a market that will form a first red day, a day that makes a peak formation high first at or near the high of the week and closes below the open. This is an opportunity now to take a look at cross pairs to see if a market may be offering a better opportunity in terms of shorting weakness against strength. We talked about this the other day. And so obviously this is a low-hanging fruit opportunity, but the question I would ask myself is there a pair that may be offering a better opportunity in terms of shorting weakness against strength? When we look at the Swiss franc, which was the first red day yesterday and a market that broke out for day one shorts in the market, and if we just bring this chart back and look at the week, we had the day one, day two opening range was an inside bar that broke out on Tuesday before reversing and going back to the high of the week. So false break reversal, our inside bar false break reversal trade for traders in the Europe-London window. Again, that's on page 69 in the playbook. So that makes our new low of the week, our initial balance. Tuesday forms our new low of the week, and we trade back into Friday's high. Day one, day two, first red day up high, and then a day three. Sorry, I've got that wrong. Our first red day was on our Wednesday, and that gave our day three Europe high of the day, high of the session trade heading into the Europe-London window on Thursday. So we come into our Friday session and we have a Swiss franc that has been gaining strength against the US dollar and a euro that potentially now is losing strength against the US dollar. And so this is an opportunity to compare the two cross rates. And again, I talked about using the TradingView Forex scanner. This again just shows, I look for percentage of change in terms of, this shows the current price in relation to yesterday's closing price. So it's not the high-low, but it just gives me an idea of which pairs may have traded further away from their closing price. And I just will take a quick run through the major pairs and the crosses to see if anything is ideal or better setup than what I see on the major pair by itself. That said, it only takes a few minutes to run through the pairs in each section. So when we look at the Euro Swiss from the beginning of the week, we have our opening range again on Monday, just following the process, an opening range that breaks out on our day two, and that forms our high of the week. Our initial balance is now in place. And as we come into our Friday session, we have major red news at 8:30, but we do have a market that broke structure on Thursday on the inside, a lower low. We took out a daily low before trading back up to the high of the week in our London gap. So we have a lower low in place, and that can set the stage for a pump up into the high of the week. We come into Friday's session, and this market has also done the same thing. It breaks down and makes a lower low inside of the day itself. Lower high, lower low before pumping up, taking out the high of the week. And remember, we have major red news at 8:30 US time. And this market traded into the news. We had a little doji wick after the engulfment, but virtually not a lot of volatility. We saw a little bit on gold and a large candle on the indexes. But nothing of real explosive first bounce, but we have a continuation trade that just continues to collapse into that US window to the end of the session for an easy 50 pip move. Comparing that to the other pairs, after the news we see a collapse down an easy 25 plus pips on the Swiss franc. Again, not quite as large amount of movement, but a zero stress trade after the news. On the euro, we had a low-hanging fruit continuation, a pump up into the lower high from the London session for the collapse back down for, if you held on to that, for a 50 pip move. But comparing the three, obviously the Euro Swiss was an easy trade, and the Swiss franc itself was an easy trade. And the euro was an easy high of the session shorting opportunity from double zeros in a broken down market. But in terms of ease of execution, the Euro Swiss was probably an easier trade to take, as it just pumped up the news candle and then the continued collapse throughout the session with zero to little stress involved in that trade. So again, sometimes when we have opportunities in different pairs, it's worth comparing the cross rates when we have major pairs showing weakness and strength together, especially the euro and the Swiss, because they tend to trade in similar behavior. If the euro is going up, the Swiss franc will tend to show weakness, or vice versa. If the euro is showing weakness, the Swiss franc will tend to show strength in a lot of cases. Not always, but this is a good correlated pair in terms of looking at the cross rate when we have opportunities that can present for a best trade setup. And you'll notice on the Euro-Swiss pair that spiked down to our opening range breakout from our day one, day two. So remember, opening range, initial bounce, we had an opening range breakout, and that formed our high and low for the week. In a large majority of cases, one of those extremes will tend to hold. So again, it's worth noting sometimes it takes a little bit of extra effort, but this again is a best trade candidate, and there are a couple traders that hit this trade today. Again, I know some traders got in before the news, and sometimes, obviously there's very little reaction here to that news candle itself, but it never pays. I always wait for the news, because all they need to do is throw a spike up. But after the news, 5 minutes into the news, we already know that that's the behavior, and we can take a closer look at this. The news candle's been digested. We can go about our business and enter that market now, because we already have our confirmation, our entry's already in place. And just in terms of simplicity, if we are looking for a range expansion as a possible target, we can see that one full expansion of that range takes us into that opening break from Tuesday's breakout of Monday's opening range. Screener sometimes can be of assistance. In other cases, it just takes a few minutes to run through those extra pairs. But this was an ideal opportunity, because the template for the Euro Swiss set up beautifully for the week. When we get this type of opening range breakout, and you notice this on a pair if you're running through prior to market sessions or anything else, and you get this large pump day, inside day, by all accounts, narrow, and then our 7-day and our 4-day or narrow range day, inside day, that the break in structure, and that can be the catalyst now for the pump up, for the dump heading into the end of the week. So hopefully traders got some value from that. Again, it takes a little bit of extra time to run through those pairs, but it's important to note that when you get a template that sets up like this, and you notice for the euro or Swiss franc, we start to see those changes towards the end of the week, where we may now potentially be locked. The high of the week may be locked in. It pays to look to see if there's a cleaner pair in terms of shorting weakness versus strength. So keep it simple, traders. Enjoy your weekend. We'll be going over the gold and the oil trades as well for the week. But this is an excellent opportunity, again, just to digest some of the best trade setups heading into the weekend. Congratulations to the traders who nailed this trade. These are best trade setups right out of the playbook, and sometimes it just takes that extra few minutes to run through these pairs to identify a best trade candidate. Have a great weekend, traders. 1% better every single day, and may the markets go with you.